All right, so we already went over basically everything that I use. Remember, we did a new thing basically every single day, and just built on it, built on it, built on it. So y'all know exactly how I trade now. Thing is, you're just gonna have to start being consistent with it, trusting it, finding which ones are good, which ones are not, and just really starting to apply it. So if you're struggling now, trust me, some people takes 90 days, some people they get it right away. I know a few of y'all in here are already been having really nice profits and doing really good. And some people are going to struggle. That's just how it is. Everyone learns at a different pace, and everyone has a different eye on the market. So if you're struggling, don't worry. Um, you're just going to have to just keep applying it and just try to build consistency. One of the big things we noticed was, in the classes, you don't have to win a lot of trades to be profitable. As long as you're using proper risk to reward ratios, proper risk management, you really only need to win, I would say 40, 50% of your trades. So, and then again, if you're using, the lower time frames like I do, you will be able to, just win one and be ahead for like the whole week. But this session is really just for Q&A. So if you want to type in the chat anything you're struggling with, anything you would like me to explain, definitely let me know. And then we can start looking at some stuff together. There is one trade I'm looking at for tonight. Send it in my group. And it's going to be a USD CAD trade. So what I'm looking at on USD CAD is, oops. The best way to find setups as a beginner is going to be going to the 1 hour and 4 hour. You can use the 2 hour, 3 hour, but what you really want to do first is just look at price action like this and then identify the liquidity. So you can see right here, right? You see this high, you see all these highs in here. I would go ahead and just first always identify the liquidity. So this high, and then you have all these equal highs. That would be the liquidity there. And then down here, we have these equal lows. Okay, you can see all of these lows in here, right? There's a ton of lows. And how the market works, remember, it's going to go from liquidity to liquidity. So you can see they grabbed liquidity here above the highs, brought the market down, grabbed liquidity below the lows, and now we should see the market come back up. And what I'm going to look at is on the 15-minute, I believe. I was just looking at my phone. Okay, let's go to 30-minute first, and then the 15. Sorry about this delay. Come on. Try to refresh it. I'm about to go. All right, I switched Wi-Fi's real quick. All right, so let's go back to what we were looking at. Still recording, so that's good. All right, USD CAD. We had all the equal highs here taken out, and then all the equal lows taken out, right? So again, the market goes from liquidity to liquidity. What I'm looking for now is you see this down move to the lows, bullish engulfing, retested. That was the buy sniper. So you definitely could have got in here, right? And then if we jump down to the 30-minute, this little area in here. So it looks different on my MT4 on my phone, but right here, there's a down candle. And then what I noticed was right in here, there's some imbalance. Okay, you see this imbalance? Wick on the left, wick on the right. You see how that's the only spot with a gap? Look at this. It's all filled in, it's filled in, it's filled in. Then we have this gap here, right? You see that gap now? It's all filled in, it's all filled in, it's all filled in. Little bit of imbalance there. So what I'm looking for is a down move to come down here, fill this imbalance. And again, if you look at like prosperity on the 30-minute, you should see a down, like just a solid down candle right here. And then you can see how it's all lining up on top of this old one. So hold above here. Look, that's where they grab the liquidity, right? So they shouldn't go back down there. And then we would target these highs first, and then maybe come back up and start targeting somewhere in here. But that's what we would look for. And how I would specifically enter this is that's the fill of the imbalance. So if we're just going to analyze it, we're just going to, for now, say we're going to have a stop loss there, which is 20 pips. And then target these equal highs for like 1 to 3 or something, right? If you wanted to put a buy limit there, that's cool. I sent out a buy limit for that signal at 050. Let me delete this one. So 1.35050. That's where I have a buy limit for a signal. However, that's not how I trade, even though it's still valid. I'm going to wait for the 5-minute. Okay. Now, when price gets down here, right, when price comes down, we are going to look for a 5-minute setup here. You can also see some imbalance in the 5 minutes, so that's good. But in real time, we would like to see, something like this. Oops. Down candle to the entry. And then even if we get a bullish engulfing here off the entry, right when we get that bullish engulfing, we're going to look for a little bitty buy there on the 5-minute. Boom, we would take the buy. So now we know the 1 hour held. It gave us confirmation to take the buy here. We're going to take that up. And now this is our entry, and our stop loss is going to go below here. So we'll have a little bit of a smaller stop loss. But that's how it would work. Does that make sense? The liquidity grab cause sometimes I see like a sniper setup and it doesn't take out the liquidity. So we don't really know exactly where the orders are. So you'll never know if they grabbed enough liquidity. So that's a hard question to answer. You can't really answer that. However, if they trade away from the market aggressively like this, they grab liquidity. And then you'd start looking for your sell setups. Grab liquidity, it comes down, and then start looking for stuff like this. Bullish move up, bearish engulfing, enter the sell and retest. Bullish move up, bearish engulfing, enter the sell and retest. Rejected here, almost about right there. That's what you would look for. But once it starts getting down in here, like you see this one, bullish move up, bearish engulfing, we wouldn't want to sell here because we saw that we already are starting to take out lows here. So this is likely going to be a new bullish move. And this is probably some imbalance right here. Usually when they grab liquidity like this, there's going to be imbalance. I mean, not imbalance, divergence. So you can see definitely divergence, right? Grab liquidity, created divergence. Down move, grab liquidity, created divergence. So this is giving us a good indication that it should go up. But I would, if you see like a solid sniper that looks good, you can, take it with, 1% risk, 2% risk if it didn't grab liquidity. But you really want to see them grabbing liquidity to be valid. Because if it's not really grabbing liquidity, it's just a bullish or bearish engulfing candle. The liquidity is what matters. Type some questions in the chat so I can get to them. I really haven't even been looking at anything this week yet. Let's go look at dollar index. All right, so like right here, remember we caught this move and then we created a downtrend. But look, you see how they started taking out these lows? Wick the low, bullish engulfing. Now they're starting to hold this level. we could see dollar go up. And that would mean potential buys here. Even though, see, but the reason I don't do that is because we're stuck between this. Here's your highs, bullish move up, bearish engulfing, sell the retest, down move to the lows, bullish engulfing, buy the retest. So we're kind of stuck in this little wedge. So that's why I'm staying out of this one. If you're going to trade London session, probably GU, EU, and GJ and Euro Yen. Those would probably be my best ones. If dollar index is bearish for the day, would AU, EU, GU, and U be bullish? Yeah, so if the dollar is dropping, those should go up. But you got to keep in mind, it's not always like that. So look at this. AUD USD is up 25%. NZD USD is down 0.25%. See, they're doing the opposite. So it doesn't really, mean anything, because they're also, it's not just the dollar, right? AUD is their own currency, NZD is their own currency. So like look at GA is down 0.24, but then GJ is up. So GA, see the difference? So it's not always like that, but you can get a good idea that okay, if the dollar is going to go up, maybe we should look for some sells, some possible sells. Then you could go in here and see if you can find anything. Like right here, see definitely this bullish move up, grabbing liquidity. EuroCAD 4 hour. See, I remember I was giving you all this setup. I don't know if you remember that. We were actually looking for a trade there. But EuroCAD, so this is one that is risky, but yeah, I would probably sell here. But you see how it made equal highs, so that's what kind of sucks. But yeah, it's valid. Stop loss needs to be up here, so I would probably look, see if there's anything inside of the 4 hour candle. So we're going to measure the 50%. Then we're going to step down and see if there's anything at those levels. So like this would be nice. Equal highs, rejecting, bullish move up, bearish engulfing, and then sell the retest. All right, and you see how we have this little kill shot on the 5 minute? So yeah, the sell should be good. See how all that lines up? The 4 hour entry, and then the 1 hour, and then it made a kill shot. You see that, Camila? Okay. When looking at the seasonality, does it matter the order of the pair? For example, for the Swiss franc, it says Swiss franc to USD. Okay, so if Swiss franc, because it's paired to the USD, so Swiss franc is going up on the seasonality, that means the franc is getting stronger to the dollar, right? So it'd be USD Swiss franc sells. If euro is going up on the seasonality, that means you would be looking for Euro USD buys. Can we do the back testing thing where we? So I think, so the replay tool, that's something you have to do on yourself, because it's like, what if we already see them back tested? That's why I don't even do that really, unless I'm like showing a little bit of example. But because if to look for a back test, you have to already see the pattern. That's the hard thing. So it'd be like this. Like, okay, we see this down move, bullish engulfing. We would back test this, right? But we can already see it played out. So there's no really, to me, reason to back test it, because we would just be doing this. Like, okay. See, we would just be looking at this. Like, okay, there's a down move. Like this on the 5 minute, but here's equal lows there. And then you got these lows there. But down move, bullish engulfing, be like, okay, we would buy the retest. So when you're doing this, you already know which one's gonna play and which ones don't. See how it like blows through it? Like it looks like it's gonna freaking shoot down, right? And then that's why it takes an immediate stop. Come on. See how they look super bearish, right? Like it looked like it was just gonna blow through it, but they're holding that low. You can even see two little equal lows in there. Down move, bullish engulfing, super bearish, and like even these wicks look scary, right? And then it shot up. So that's the bad thing about the back testing is you're back testing ones that already played out. So that's why I don't really do it. Could I repeat the seasonality thing? Yeah, I'll do that. One second. Could you see if there's anything wrong with the sell setup? Okay. Pound CAD. So I don't trade pound CAD often. The only thing I could see is this looks. I don't know why it looks weird right here. Is this London? No, this ain't the new candle for the week, is it? Do you see how that looks kind of weird in there? Bullish move up, bearish engulfing. To me, it looks kind of weird. Let me go see on my chart. I don't know why that screenshot looks weird. But again, I would stay away from these pairs. Trust me, everyone that takes the class, when they stick to the majors and it's like GJ, those are the ones that play out the best. There's more liquidity there. I tell everyone, do not trade those pairs, but people like to, and they end up losing on those the most. But let's go see. Was it on the? Okay, it was here. All right, so yeah. The only thing I really think the reason this went up is because it created a new setup. So if you look at this as a retail trader, this is what you see. So do you see how this is, you know, the retail wedge, right? Whatever. See how they break out, retest. So all the retail traders will be selling here. They're selling there. And that's the reason it's going to blow up through this. So this does look good, but that's why we do the 5 minute. Here's how you can back test. Okay, so why didn't it play out, right? Let's do the replay tool. We would have been right here, and we would be looking for a sell if you didn't see this. To me, I wouldn't have taken this because I can already see this is a downtrend here, and this is a breakout that retail traders are definitely looking for a sell here. Before this class, before y'all were looking at this sniper, I guarantee you all of y'all would have been looking for a short continuation when this trend line broke. But how we can see that it wouldn't have played out, we go to the 5 minute, remember, we're looking for an entry here, right? Because it's a 1 hour sniper right here, and we're looking for the sell on the retest. Okay, so when we step down to the 5 minute, we'd be looking for a sell setup there, right? Okay, it hasn't hit there yet. See, that's where the retail traders are selling. So if we know retail traders are selling this trend line retest, it's going to start going up, even though it looks super bearish. Okay, still no sell setup, right? All right, now right here is where we would want to see a bullish move up, bearish engulfing, or some kind of sell setup up here, right? See, there hasn't been a bearish engulfing or anything. It's telling it's just blowing through the setup. There was no sell setup created until right there. Maybe you could have sold here, like this bullish move up, bearish engulfing, and then it came up and retested. But even there, do you see how we're already way through the sniper? So if we go to the 1 hour, look, see how that's there. Like it's way above it. It's already back above the liquidity. So now that it's broken the liquidity, we would definitely not be selling there. Remember, these equal highs are the liquidity. we're already above the liquidity, so we do not sell. And let's see what happened if you would have sold. Probably would have just blew through it. Yeah. See, and so you keep going. Does that make sense why that was, you know, a retail sell setup? All right, let me get caught up. I'll go to the seasonality right at the end, so I won't forget. I would recommend to scroll back on a daily, on a random pair, and just pick a random spot without really looking per se. Yeah, if you want to do that, that'd be good. Or even the 4 hour, just scroll back and be like, okay, replay tool, bam, hit it, and just watch each candle go. But that would take way too much time on this call. That is a good idea. Yeah, lower time frame, that's your confirmation. That's your actual entry you should be looking for. Wouldn't we be bullish on a trend on GCAD 1 hour? Yeah. I mean, this is overall, that's where it gets hard because it is going to be an overall downtrend. What gives it away is the divergence. So if you don't really know, like this looks like a clean downtrend, and then this just looks like a, you know, short pullback and then a continuation down. The divergence is what's going to give it away. So you see the divergence there? Okay, so that's showing you divergence is a reversal confirmation or indication. So there's your divergence. Now you could say, okay, well, there's divergence. This trend should be changing. But as a retail trader, they just see this downtrend. High, this low, you know, lower low, lower highs all the way down, counter trend line. They're looking for this breakout for this continuation down. Okay. I don't see the 1 hour grab liquidity. So what they're looking at was these 2 wicks. 2 wicks here, bullish move up through the highs, bearish engulfing. You would think to look for the sell on the retest, but it was just a kind of fake out. When you enter, should the setup play out relatively fast? Yeah, it should play out relatively fast, or I would try to get out. But it also depends on the time of your entry. If you're entering like right now, before London session, while everything's kind of rangy, if you're entering like the first 3 hours of London or first 3 hours of US session, it should be quick. Can you go over the MT4 indicator real quick? I cannot go over the MT4 indicator because MT4 does not work on my Mac and I am out of town. So I don't have that indicator. I can't even use MT4. I'm only using it on my phone. So unfortunately, I cannot do that until we get back. But the beginning of July, like I said, I'm not doing another class. So we can all schedule another call beginning of July. Yeah, I agree, Shaquille, on that as well. And this kind of made equal highs, right? So I could see where you would think it's the sniper. I could see it all, but just when you take that step back and look at the overall perspective, you know, you got your divergence, a very, very obvious, clean trend line. So that's when you know it's going to be a trap for retail traders. USD Swiss franc 1 hour. Yeah, so USD Swiss franc, it's trading between this sniper and this sniper. You see it? Equal highs, bullish move up, bearish engulfing. Equal lows, low, low, down with the low, bullish engulfing. You got a wedge consolidation stuck between 2 snipers. So what we would want to do is just let this close above here. Also got a sniper down here on the 4 hour. See, it just missed it. But you see how it filled the imbalance in there? Look, if I go to the wick, look at that. See that little bitty imbalance down there? Wick on the left, wick on the right. Filled it. Probably going to go up. Let me go to seasonality real quick. Yeah, if you're look for the divergence if you're trying to find a reversal for sure. All right, this one. So this is silver. It's all fundamental. So you know it's just going to be one of those pairs. That's why I don't trade it. I stick to currency pairs. But you can see, I see what you're looking at. Bullish move up, bearish engulfing. Do you see how it filled the imbalance? So it basically already retested. Wick tier, wick tier. The only thing was maybe that wick here and it came down, maybe you get out. But once it closed back up here, I would have got out. And especially when it retraced back down here, I would have got out. Because your entry is here, or your green line is here. If anything, your entry should be up here. I don't know why you would enter there. You would have sold here. Price came down, shot back up, came back down before hitting your stop loss. So you should have got out when price came back into your entry here. Also, your stop loss would be above this high, not here. So it should be up there. Based on the 2 hour. All right, the 2 hour rejected here. So you can see bullish move out to the highs, bearish engulfing. If you sell here, that is valid. You make money, right? It goes down. That's supposed to be an arrow. But price goes down. So your entry is here. You sell here. Price goes down. You make money. You sell here. Price goes down. You make money. You sell here where you would have, you lose because look, price needs to grab liquidity above these equal highs from both of those entries. That's why we only want to enter on the first entry, maybe sometimes the second, definitely never enter the sell on the third. Do you see that now? It was already retested. It's no longer valid. UCAD 4 hour at 2100. Liquidity is taken out, but candle as a hangman. Would that be a valid bullish kill shot? Are you talking about USD CAD or US dollar Swiss franc? Okay, US dollar Swiss franc. So you're talking about this. So I would not really consider that the bullish engulfing for the buy. I would look at that more as the entry for this down here. And now it should hold above that entry. $2,100. I don't know what you're talking about. 2,000 here. I don't know what you're talking about. The bank stretch for the first time in the leader is Twin Peaks Stingray. In their second, you better bet 27-3. Neon Man is there in the third. And Fernando looks him over from 4. Static Camper is there in fifth. 4 hours. Star is next in line. It is Princess Ladina. With the beach house. Seventh candle from the right. 1, 2, 3, 4, 5, 6, 7. Oh, okay. So this bullish move up, bearish engulfing, that's valid. Yes. But it came back to the imbalance. So you would want to look maybe like on the lower time frame. Don't really see anything there. So maybe you would have like looked at it like this. The intention, so there's some highs here, this bullish move up, price trades under it, and then maybe this wick to this candle, but that's super sloppy. It's kind of hard. Oh yeah, this is what I was talking about. So like this big bullish candle, price trades under it, retest here, but it didn't hit it. Okay, on the 5-minute US dollar system. You're talking about the sell where? I see this sell, equal highs, bullish move up, bearish engulfing. Retest here. It's only sell. Oh, and that's at the entry of, okay. Is that what you're talking about? This 5-minute setup on for this one? Yeah, that's exactly what you would look for. So yeah, you missed the perfect entry, but you got confirmation of a more valid, safer entry. All right, let me go to seasonality real quick. So it just has to close below the candle that grabbed the liquidity. So I'll do it real quick. Okay, so if we have,
moving back to the winner's circle after winning the 15th race tonight, it's the 520 Stingray, an 8-year-old from Summit Better Select. And the unique Brian Hanover by Western Hanover, just of Sarasota trained Slant. 3 wins tonight, 4-4.
all right, so we have bullish move up, right? Bullish move up would be retail traders buying this double bottom. And then we see big down candle to swipe the lows. Okay, now nothing is valid. No buy or sell is valid until price closes above here. Okay, once price closes above there, you know, it could be a few candles. It could look like this.
Late double was 1260, exactly 1160, 529 trying, 4140, 5297, 26 super back to $15.96.
Come on. Okay. Once it closes above here, this down candle is the one that grabbed liquidity, right? Once it closes above the candle that grabs liquidity, that's when you enter. Does that answer your question? So it can trade under the engulfing candle or no? Yeah, a little bit. I mean, you would like it to stay, you know, above where the liquidity was grabbed, right? Liquidity was here. I was just trying to show like a little example. Liquidity is grabbed here. Maybe a few orders got out, but majority of liquidity is grabbed here, and you can see the intention. So don't try to be like super critical on it. Just look at the, you know, take a step back and look at the intention of the market. So if we saw this, no matter what really happened here, if we saw this, we would know this is a retail double bottom. Retail traders are buying, institutions are selling. Now, when this down candle happens here, we know that the stop losses on the retail longs are hit. So there's no retail traders buying. Sell stops under the equal lows are hit. If retail traders are selling because of the sell stops, that means institutions are buying. So they pick up the buy side. Once they break above, we know they need to come back and mitigate those shorts, and now they only have the longs priced in. Okay, hold on. Let me look at this chart real quick. Yeah, so this would already be hit. Definitely down here. I do like the buys though. Yeah, that would already hit. Okay, and then staying on kill shot topic, can you show an inverted setup? Okay, so you're talking about this. And just all you gotta do is change the colors. And if that's something you struggle with, you could always invert your charts, you know, and make sure you see it both ways. So now you'd be looking, oops, this should be green. So it's the same exact thing, just inverted. I mean, what I mean by that, if I delete this, so like let's say, you know, we were gonna enter this, oops, let me uninvert this. All right, so say we were gonna look at this cell, right? Let's just say, for example, that this was a bullish move up to these highs, bearish engulfing. Obviously it's not, but let's just say, okay? And then we were gonna take a sell on this sniper. All right, so we would say we're looking for the sell on the sniper like this, right? And you can zoom out, you can see this is a downtrend. But if you don't really know, you know, you can always invert, and now it looks like a perfect buy, right? Because this might be a wick through the lows, bullish engulfing, and now you see the perfect buy. For me personally, I win a lot more of my sells than my long positions. I don't know why. It's just when I see sells, I just have a better eye for them, better, you know, I'm just better and more consistent at taking short positions in the market. So, you know, if you struggle with your buys or you struggle with whatever it may be, you can always invert the scale. Let me know if you all have any other questions. Remember, we have that other webinar here shortly where we're going to look at all the pairs. I'm going to just hop on that one straight after this one. So, oh yeah, the seasonality, my bad, perfect. All right, so seasonality is going to be your 20-year average of price action. All you really are looking at is, if you're going to look at the US dollar index, you have to go to the futures right here, go to currency, and you will see US dollar. Okay, so what this is telling you is it's the 20-year average. So the last 20 years, right at the beginning of May, price was bullish until mid-May, and then it started retracing, and then started a downtrend beginning of June. So you're just looking for setups in that direction. So let's invert this scale back. So if we go look here, so we're at the end of June. End of June is bearish on dollar, actually. So you see, this is about the end of June. This looks like about the last week of June. So we should be looking for sells, and maybe we found our sell here. So that's all you're really doing. You're just looking for setups in the direction of the seasonality. Now, if you're gonna look at all the other currency pairs, just click Forex, and now you can see Euro to USD. So if we go look at this right here, the end of June, Euro is bullish. We just saw USD is bearish, so we should probably look for Euro USD buys for the end of June. So we would go to Euro USD, and we would look for buy setups. That's all you're doing. So Harry, USD, do we have a setup this week? I have not been on the charts at all. This is my first time to even open my computer this week. So I haven't looked at anything. I'm about to look at everything on that next call. But how many pips have you ever made in a week? So if you're talking about like just currency pairs, I mean, it just depends. So like new trades, like scalping, like I've had, really good weeks, but like US 30 moves, I've had like 25,000 pips in a week on US 30, but currency wise, like not just closing a swing trade, because I've held GJ longs for 2,000 plus pips. So one trade I closed 2,000 pips on. But realistically, like I think you should just don't even really target pips, but like 300 pips a week is fine. Can you drop my top three? So GU, UJ, and EU. GU, EU, UJ. Those are my three favorite pairs. Do you have any suggestions or a website to go to create your own? When I one day this week, I'll look on my computer, see if I saw it. I had an Excel sheet that one of our members made that would document everything for you. So I would have to look into that. If not, maybe just a quick Google search. I don't personally use anything like that, but if you can't find anything on Google, let me know and I'll really look for it. I have it somewhere. I'm just afraid that it's in my messages and not saved. All right, there's no other questions real quick. I'm gonna hop onto the other webinar. So make sure y'all hop onto that one and we'll start looking at all of these pairs. And also I will try to fix the day 9 in the Dropbox. It should be uploading, but after this call, it definitely should be in there, I would think. Real quick, I did, but yeah, be able to do. Yeah, all right, I'll try to find an Excel sheet for you. And then you can like document everything and it'll help you track everything.